Money is energy and information because Bitcoin is money. I think 60% annual growth is conservative. Yeah. Countries with abundant excess energy, they could be very wealthy countries. You raise capital, you allocate a portion to buy Bitcoin, which will pay back the principal, and then you invest into a revenue generating activity like mining Bitcoin or building new energy infra, also mine Bitcoin, which will pay the coupon off.
What do you think about Bitcoin treasury companies?
Hard to say.
All right, Samson, Mark, we got a lot of topics to talk about, so thanks for taking the time to come talk to me.
Thanks for having me on.
We're here in DC at Bitcoin and Policy, Bitcoin Policy put up by Georgetown University. So I want to talk about politics and regulations, and I want to talk about the keynote Saylor had yesterday talking about tokens, which is typically not something we hear in the Bitcoin space. Something you worked on for a really long time, nation state adoption and what's going on in El Salvador. I want to get into the Bitcoin protocol. I want to get into the knots versus core debate.
There's always something going on in Bitcoin. Oh man, it keeps it exciting. You have to find something.
So here we are, we're in DC, both of our first time here. I guess, first of all, how do you think about how, are you Canadian?
Yes.
Okay. I find that sometimes maybe Canadians, Americans look at this a little differently because of, the country you grew up in. But how would you look at the way you think that Bitcoiners should be working with governments or not working with governments or asking of governments?
Well, it's an interesting topic because a lot of Bitcoiners are often criticizing what we're doing because we engage with governments that's top down. We have two strategies, top down, bottom up. Bottom up is Aqua, getting the unbanked into a financial system. And then top down, we engage with governments, politicians, regulators. We even meet with central banks. But the question is, why do you want the governments to have Bitcoin? And I think it really comes down to what kind of world do we want to live in? There's a number of dimensions to this. One is in countries with abundant excess energy, they could be very wealthy countries. And Bhutan is a great example of that. They're just converting excess hydro into money. They are using that money to build a new airport, but it shows the promise of that. And for any energy-rich country, that is your path to prosperity. Much like in the UAE, you don't pay taxes if you're an Emirati. The government gives you money. And that could be the case for Canada, for example. But moreover, most governments need money. It's like a big machine that consumes money. Like today, the government in the US is shut down, right?
Yeah. You wouldn't notice it, but yeah.
Yeah, you wouldn't notice it. But Bitcoin price is up, but maybe that's uncorrelated. But governments need money. And when they need money and there is no money, that's when they look to different ways of getting it, like wealth taxes, taxing unrealized capital gains, seizure of money for whatever reason from the citizens, or various other creative ways to take money from people. So I think if you can get a government to adopt Bitcoin, and if they have energy, even better, they can mine Bitcoin, then you kind of wean them off the wheel of taking money from people, for lack of a more eloquent way to put it. So that's one thing. The other thing is obviously we want to be protected. As Bitcoiners, we don't want our Bitcoin taken from us. We don't want to be blamed. And if you look back in history, there are many examples of, groups or ethnicities that are blamed for various problems, usually economic, right? Many, many examples in history. And I can see if we are in a fourth turning and things do get bad, who do you blame? It is the Bitcoiners, because maybe we're okay. We're doing okay because we have Bitcoin.
Yeah.
And the counter to that is really getting more Bitcoin adoption. And the government can encourage a lot of Bitcoin adoption. They can say Bitcoin is usable for payments because most people don't want to go against the government, right? So if you can get the governments to embrace Bitcoin as money, more people will have Bitcoin. So if you think of it, you don't want a witch hunt. And how do you avoid or avert a witch hunt? You make more witches, right? More Bitcoiners.
Create witches in the government.
Yes, exactly. And also, I think if you get the government to understand Bitcoin, and there are a lot of Congress people and people like RFK Jr. that understand it, it's kind of fixes itself. Bitcoin does change people's thinking and the way they view the world. And I think if you have enough of that and a critical mass of that, maybe it's possible to change government for the better. I don't really see any other way of doing that, because the nature of government is to, take and redistribute at the fundamental core, right? Ideally, I don't know if you're for smaller government, but ideally it's just administrative.
Yeah.
Make sure the borders are safe and people can live safely. But then it always scope creeps into more and more and more things, more programs, more free things. And then it kind of spirals out of control and you have $37.8 trillion of debt.
Yeah.
So I think this is kind of the reason why you do want governments to embrace Bitcoin. Is not that we want to give the government lots of Bitcoin, but we want them to understand it, use it, have ways to get Bitcoin that is not taking it from people, and learn about Bitcoin and learn the ethos of Bitcoin.
Yeah. Yeah. I love that. Saylor, in his keynote yesterday, he said that he thinks everything really changed 12 months ago, and that's with the new administration that came in.
Yes.
We can see how the previous administration, what an alt universe we're into. If Kamal had won and kind of extended what the Biden regime had been doing, where that would have gone. But, what Saylor's talking about is you sort of had basically everyone in the government was very hostile to Bitcoin and crypto.
Yes.
And as Frank, I did a fireside chat with Frank today on stage, and he said, something I say quite often was the government's not a monolith. It's a bunch of people in the government.
Yes.
But under the Biden administration, very few believed in Bitcoin or were invested in Bitcoin. And today's Trump administration, from Trump himself all the way down to the cabinet, they're all Bitcoiners.
Yeah.
So I think that's a pretty big thing. What do you think about, though, with the laws, right? So, I think more of a constitutionalist where, the law should be preventing the government from infringing, back to having a small government.
Yes.
I think, in America, we have a Second Amendment. Mm-hmm. So it's not that there's no policy of guns. The policy is, don't infringe on my right to have guns.
Yes.
Right.
So, I think of I see some of the states, we've had 6 states put through rules that say a right to self-custody, a right to mining, right to open networks. But then at the same time, with new technology, if we look back like the telecom or in the internet days, there were rules put into place that protected the industry to allow it to grow.
Yeah.
And so a lot of rules that they put in place could hurt it as well. So how do you navigate that?
Well, I think it has to do with the evolution of technology, right? Like when the Constitution was written and the amendments were passed, you didn't have central banks and government money predominant in the world.
But Jefferson was warning us about that.
Yes. But, when money is centralized and largely digital and very controllable, then a lot of those rights are no longer guaranteed, because if you have no ability to have your own money, like let's say the right to bear money, then can you have free speech, right? Can you actually, pay for your internet bill to post something? Can you bear arms if you cannot buy arms? Or if they have a social credit score and they go, yeah, you can't have this now, right?
Something you can't pay to drive to the assembly, right?
Yeah.
It all hinges on payments.
Yeah. But it was kind of assumed that money would be bearer until suddenly it wasn't. And I think Bitcoin fixes a lot of this. And I think perhaps it was Trump's experience, being attacked by the other side that made him understand maybe a bearer asset is good. And you do see him piling into Bitcoin. Unfortunately, a bit too much in the crypto side, but nobody's perfect. But definitely it's on the right track that he is for bearer instruments. And I think this is kind of the way to fix that. But it's kind of sad that you have to pass laws for the right to having self-custody or other things like that, when it should be a given that you should be able to have money as a sovereign individual.
Yeah. What do you think about some of these dragnet surveillance orders in today's day and age? You had mentioned earlier, for example, I go through the border, they open my phone, now they can see my account passwords, or they can see my private keys and things like that.
Yeah. Well, I don't think there are enough protections right now in this day and age, and at a global level especially, where it's the world is ready for money being information. So you missed my keynote after Saylor, but I was talking largely about the equation being changed now. Money is energy and information, because Bitcoin is money. And this changes so many different things, because money has never really been information before. and money has never been energy before, right? Like Henry Ford theorized it in 1921. He said, let's have an energy currency. But it wasn't until the dawn of Bitcoin that we actually had an energy money. But that means you need energy because energy is money. Like I gave the example before. If you have energy as a country, then guess what? You're a rich country and you have money. Yeah. But with Bitcoin, it changes it because it's not just oil in the ground or whatever. You could have nuclear reactors and have money too. But the information part is different because money as information means you can teleport money anywhere around the world. Capital controls no longer exist. And I believe right now we're seeing countries kind of grappling with that new reality. In Korea, they're trying to push for a Korean won stablecoin. Is that going to be only transactable in Korea and subject to the same limits, or is it free flowing? If it's free flowing, then you don't have capital controls anymore. And I think this is kind of where the battle is, like the internal, conflict is. Do we have free money, or do we want controlled money and controlled economies? And to that extent, you need more protections too. Like I was saying, like when you cross the border, if someone can take your phone and take your information or look at your information, they can take your money. And how do you prevent that? Because someone looked at it. How do you prove that they stole it? And like ideally, as a Bitcoiner, if someone ever looked at your seed, treat it like it's gone.
Yeah.
Or if your device is compromised, then move your funds immediately.
Yeah.
But as we get more and more Bitcoin adoption, that learning curve is applied to billions of people around the world. And I think you need some protections. And the protections really come down to more sovereignty, like making sure people are independent, reducing the surveillance state, right? Like what happens if a camera somewhere catches you with your seed phrase and the guy with the camera can, steal your funds? Yeah. There's always that possibility. Yeah. But the world we're going in is tilting more towards the surveillance side rather than to more freedoms. So this is an interesting point in time where we go, but definitely governments need to be cognizant of all these changes and, protect the people. At least you hope they will.
We talked a lot about name drop to talk a lot about American politics. What about Canadian politics?
I mean, our prime minister is a former central banker and heavily tied to the World Economic Forum and all those organizations. But we'll see. We have Pierre Poilievre, which I've met him before, and he understands Bitcoin. He has Bitcoin.
Like him.
Yeah. But unfortunately, he didn't win the last election.
Yeah. So I did miss your keynote. I wanted to see it because I want to be more prepared for this. I love the framing, though, of Bitcoin as information. And so a lot of times we try to compare new technology to things that we understand so we can make sense of them. And they are like those things, but they're also more. I mean, that's kind of what you're framing. So I'm going to go back and watch it. For everyone listening, I'm going to put it in the show notes down below so you can go watch that keynote as well. Unfortunately, I missed it because I was coming up here getting ready to have Saylor come up here, but I did watch his keynote. So let's talk about that for a minute. Yeah. A lot of buzz going on here in DC about the keynote. A lot of things that I thought were really good. One thing that seems to be creating a lot of buzz in the Bitcoin community specifically was he spent quite a bit of time talking about, I guess, tokenization of real world assets.
Every day we see headlines about inflation and debt and diminishing control over our own money. That's why I always come back to Bitcoin, because it's built for generations. It's built for legacy. But protecting your Bitcoin legacy the right way, it's not always simple. It demands discipline, focus, and the right partner. Now that's why I personally use Unchained Signature. It's a premium private client service for serious Bitcoin holders who want expert guidance, resilient custody, and an enduring partnership. Now with Signature, you're paired with your own dedicated account manager, someone who understands your goals, helps you every step of the way. You're gonna get white glove onboarding, same day emergency support, personalized education, reduced trading fees, and priority access to exclusive events and features. Unchained's collaborative custody model is designed to provide the same security as the world's biggest Bitcoin custodians, but for those who prefer to hold their own keys. Now, I've been using and recommending Unchained for years. I even got my parents to set up with them. So if you want to get set up, check out Unchained Signature at unchained.com/MarkMoss. And as a loyal listener, I got a discount for you. Just use code MOSS10 at checkout to get 10% off your first year, because your Bitcoin isn't just for life, it's for generations.
Well, I think there is a place for it. And the world definitely is changing to embrace, real world asset tokenization more so. But at the same time, the TradFi world is evolving too. So I think soon you'll have 24/7 trading of equities. And then the question really is, what is the benefit of tokenization? And I see a really interesting path from there, because it's always a competition, right? The origin of stocks were bearer. You have a piece of paper and that's your stock in the company. I think real world assets could be very interesting if they're tokenized in a way that they can be bearer, because then you can have distributed ownership. But the question again is, does the system as a whole want that?
Well, it made it illegal, so I would guess no.
Well, yeah, so we'll to see. But going to that kind of a world is very interesting, not just 24/7 trading, because I think the old system will evolve in that way, but having a real benefit, which is something is bearer, and being able to be okay with that. But like you said, it's not something that the system wants. Yeah. But what Saylor's point was more so like, I think it's okay now to tokenize things. And the critiques on his talk were more about, why are you talking about all these other crypto projects and why you can tokenize on those crypto projects, right? And also he mentioned Katy Perry a bunch of times. And it was funny because people were messaging me and saying, what was that about? Like, what was he going on about? And I was backstage, so I didn't really hear what he was saying.
Well, he was saying that somebody like a Katy Perry
Yeah.
could create tokens for her fan club.
Yes.
He said that a country club could tokenize their memberships. And so you could have influential people, musicians, movie stars, athletes, country clubs taking assets that maybe couldn't create liquidity before, and now they could.
Yeah. I listened to the talk after, so I caught most of it. But the problem, he was saying it didn't work before because I guess he was implying the administration was kind of hostile to that, which we talked about too, right? Like the Biden administration. But he said if you have like regulatory frameworks and there's safety for people, then you kind of remove the fun part of it, which then anyone can just go live and launch a token, right? And if you have the protections, then you're going into the realm of it being regulated by something like the SEC. Maybe it's like the Fund Token Securities Commission, Fund Token Commission, or something like that, right? But then you do that and you add some friction back, right? And there's no way, I think, for any organization to do that. Like Saylor also said, 40 million businesses need access to the market, right?
Let's stick on the fan club stuff right there. Sure, if we can. Because I think what he was saying, and I believe Trump put forward this year in one of his executive orders with the Digital Token Act, is to allow these things to happen without being considered a security and without the SEC oversight. Yeah. So they're not really a security. And so like, I can already charge people to join my membership. Yeah. Why couldn't I just tokenize that without it being a security? And I think that's what he was saying. Because buying a country club membership that happens to be tokenized isn't really a security. Yeah. I don't know if it creates any value. Whether I pay to join your Katy Perry fan club and I get a token or I don't get a token, I don't know if that creates any more value for you.
There is some value, I would say. So there is value in tokenization if it is a bearer asset, right? Maybe equities, no. But definitely a membership token is. And is it really bearer? Is it transferable? Can you give your Katy Perry fan club membership to me? Right? And this is something that most entities don't want. They don't want that fluidity and liquidity. They want to lock you in. So if someone did want to do that and is fully transferable, then and they honor that transfer, then that is better than the old system where you cannot have that liquidity or transferability. Yeah. So maybe he's right in that sense. But then usually when things are tokenized or tradable, someone wants to regulate that too. Right. But if you can avoid that and it is free flowing, then yes, you can have your fund and tokenize anything. there is a danger, of course, of people scamming, but that's always been a danger.
Yeah.
Right.
And we have laws against fraud.
Yes. But you open up a bigger can of worms because now anyone can make any fan club. And how do you know that that's the real Katy Perry fan club?
Right. Okay, so then and then he also mentioned like the 40 million businesses that can't raise capital because it costs millions of dollars. It takes 2 years to go public.
Yeah. Well, if you think about it, why do we have all the regulations against going public? Because there were bad actors before and we had to protect the people. So it really comes down to it. Can you regulate 40 million businesses all going public? And how exactly mechanically would you do that? Do you just step out of the way and say, it's like a fan club token? It's a free-for-all.
Well, I think he would. So again, I think what happens is here we are in DC and we have all these legislators.
Yes.
And their job is to legislate.
Yes.
We have lawmakers and their job is to make laws. And so you mentioned earlier the scope creep. So what happens is probably good intentions. Yeah, let's have some consumer protections. But then over years of continuing to make laws and legislations, it gets creep, right? So like if in this digital token bill, if a company was able to like raise money, maybe it's up to a certain amount, 5 million, 10 million, 100 million, whatever that number is. And I had to make disclosures and you had to see cap tabled in ownership, but I could just create a token, raise money really quickly and not go to the whole SEC burden. I mean, that could be beneficial. Now, if I defraud you, I broke a law. There's a law for that, right? So I think the laws that we currently have now sort of could catch all of that, maybe. And then at the same time, and then it's like, do we believe in the nanny state?
Yeah, I mean, this is the crux of the issue. Like, right. What will it end up as? You could say 40 million businesses can now raise capital. And then some things bad will happen and there will be an outcry to lawmakers to say, protect us.
Right.
And they will start implementing some lightweight protections and then they add more and more and then eventually end up with the exact same system as the public company with the same costs, same overhead, same complexity.
Yeah. What Saylor said when we interviewed up here and we talked about it is he said, you can always have that argument like, hey, maybe the government should make electricity illegal because I shocked to myself.
Yeah.
And maybe we should raise the driving limit age to 60 because people hurt somebody in a car.
Yeah.
And so you're never going to get away from that. And so you always have to sort of look at the good and the bad in those things. And a few people electrocute themselves, but most of us have light heat. So that's pretty good, right? A few people maybe die in car accidents, but like we can move around the world and that's pretty good, right? So I think that's kind of what he was calling for. I think also what I was hearing was it sounded like he was actually trying to make a clear distinction that Bitcoin is a commodity and everything else is maybe not security, but some form of a company and should be completely different. I thought I heard him maybe trying to really designate that different.
Well, if you listen carefully, he's basically implying that all the other crypto projects, blockchain projects are corporations that, well, actually he said it. He said they set up a Swiss foundation and they're pretending to be decentralized. And now that...
Do you agree with that?
It's true. I mean, they are corporations, right? That were pretending to be decentralized. And you could argue, was it ethical or not ethical? Because at the time, the regulations were that, you know, if you're a security, you should register, right? Yeah. At the time, the laws were very clear. Right. Ethereum was very obviously a security if you go back and listen to their pitch to investors. Right. But of course, they're kind of grandfathered in, and now it's a free-for-all. Everyone, like Tron is a company now, right? So it just changes with the time. But the danger is the pendulum swings the other way. And I've heard a few people here in DC kind of mention the same thing. Like, if you swing it so far here and everything is good and you're able to do anything and, you know, Tron is listed, then what happens when the Democrats come back into power and they seek to, you know, punish some people that may have gained from that, and the pendulum goes hard the other way. So I think there has to be some balance.
Yeah, I agree. And, but I think like, and maybe I just heard whatever, I was biased here, but like I said, I think you've heard the same thing. He didn't sort of make this distinction. They're all some sort of quasi company and maybe not a security, but it's not Bitcoin. And the reason why maybe I latched onto that is I talked about it today when I was up on stage. But what I'm afraid of is when these lawmakers are now making laws to regulate this, they lump it together. But Bitcoin can't do what the other ones could do. So they could regulate these things happen on crypto, but you can't apply that to Bitcoin. So I do want the lawmakers to understand these are different things moving forward.
But the SBR was very encouraging, and I would credit David Sachs with that. There's the SBR crypto stockpile.
Right.
This is to be added to or accumulated budget neutrally. This is to be disposed of, held until disposed.
Yeah. I could keep going. I have a lot of thoughts on like even tokenizing RWA.
But if you want my opinion, the best way would be to deregulate everything. So you focus more on education. There's no reason why you can't educate people to think critically for themselves. Like, what is a scam? What is not a scam? And that, you're probably going to lose money if you invest in one of these crypto tokens, and let the market sort itself out, because you can't really regulate it. Like, how would you regulate altcoins? You can't, right? Either you do it or you don't, because there's like, I don't even know how many there are now. Like, last count, I heard like 20,000. I think
Well, on coinmarketcap.com, there's 19.5 million.
Okay, there you go. 19.5 million. And you can't regulate those. How can you regulate 40 million businesses that all want a mini IPO or whatever it is to raise capital?
Yeah.
Right? And then you factor in external actors. Not like, at that point, you can't really know, is this an American business or company, right? For sure. It could be some guys in Pakistan or India masquerading as an American company, raising money from Americans. And you can't control that. So I think what it comes down to is you have to be okay with educating and the free market. And that's the only way I could see this vision of Saylor playing out in a way that works.
Yeah. And our founding fathers said as much. And they said that, really this only works with an educated people. And so we have to be educated on what's going on, but we also have to be educated on the real world at both, both times. And so to your point, like, rather than trying to kick out all the risk, can we be educated to manage some of the risk?
Yeah.
Right. Like, yeah. Let's, like I said, I have a lot I could think about RWA tokens that we can get into. The bearer instruments are important. If I think about it from a first principles level, I also just think like, how much value does it add, right? So for example, we know Kraken is now doing like tokenized shares. But to your point, if I don't have this bearer instrument, will this add any value? Just recently, I never done this before, but my friend sent me some tickets for Ticketmaster. I just sent it to somebody else. And so I just logged in my account and I reassigned it.
Yeah.
I mean, that's kind of like a token, but I don't think it happened on a blockchain. It just happened in their database, right?
Unless it's the Bitcoin blockchain, most things are kind of central.
Right. That's my entire point. So like, how much value are they adding? And then you think about like, well, let's tokenize real estate. But like, there's no global market or liquidity for that. So like, how am I gonna, if it's not fungible, so how do I measure a token on a duplex at Daytona Beach, Florida, to 500 unit building in Vancouver? So it's like,
Well, the other thing is, if you have the token and you lose the token, did you lose your house? No. Right? You got to get it back from somebody. So it all goes back to, there are maybe some minor benefits to tokenizing real estate, but at the end of the day, you have a registry.
and I think a token is a fractional unit,
Yeah.
and you can already fractionalize it with corporation and issue shares.
Yeah.
But let's jump topics. Something that you've been working on for quite a while, and you actually talked about it in the beginning when I talked about politics, is nation state adoption.
Yeah.
And when you think about like the government's not a monolith, can we just get a few more witches, as you said, or can we get a few more people that start adopting Bitcoin? So the first nation I think you started working with was El Salvador.
Yeah.
So I want to know more, a bigger nation state, but let's just talk about El Salvador for a minute.
Sure.
El Salvador started off 3-4 years ago. They made the announcement at the Bitcoin conference in Miami that they were going to adopt Bitcoin, and like it was this excitement. I've been down there many times. They started buying a bunch of Bitcoin. It's worked out tremendous for them.
Yeah. They've done well.
They did very well. They're going to do the Bitcoin bond, which was the volcano.
Yeah.
And it looks like everything's kind of been unraveling. What's going on in El Salvador, the nation state adoption there?
Governments will never stop printing money, so inflation, it's not going away. Now, if your money's not earning at least 10% a year, you're losing purchasing power. Now, that's why I talk about Bitcoin. It's the number one way to beat inflation and secure your future. And the question I get asked almost every day is, where do you buy your Bitcoin? Now, for years, I've personally used River.com, and I only take on sponsors that I use and I trust. And I trust them because River's Bitcoin only. They have 100% reserve, and they keep your Bitcoin safe in cold storage with no middlemen. And you can actually talk to a real person, a US-based support dedicated manager. Now, try getting that peace of mind from Coinbase. Of course you can't. Now, the perks, if you set up auto buys, you can pay 0 fees. Plus, instead of your bank paying you, 0.4% on cash, River pays you 3.75% on cash paid in Bitcoin. So if you're ready to build your Bitcoin position with confidence, go to river.com/markmoss and get up to $100 in Bitcoin when you sign up. Because freedom starts when you own your money, and your money starts with Bitcoin.
Hard to say. There hasn't been much direct communication, and it's become sort of a loyalty test. Like, who do you trust, us or the IMF? Because El Salvador is saying they're buying, but the agreement with the IMF says we will not buy. And that is signed by the Minister of Finance and, at the direction of the president, unless he did it without the president knowing, which I don't think is possible. So there is kind of confusion now. And a lot of Bitcoiners are also asking questions like, how is this possible? But the reality is, like, somebody is not being forthcoming here, either the IMF or the Minister of Finance or the presidents. And it just comes down to this loyalty test now being pushed out. Like, do you believe the IMF? That's what a lot of supporters of El Salvador are saying. But then, El Salvador also said we're not buying anymore. So it puts us in a very difficult position. And there's a lot of uncertainty. Also, when they walked back the Bitcoin law, which was a provision of their agreement with the IMF, that was kind of...
So what was that? Walking that Bitcoin law back?
They've had to soften the Bitcoin law. So basically, there is a Bitcoin law, but it is like voluntary, which is the legal tender. Yes, it is in writing legal tender, but it's voluntary.
They're not enforcing it or making anybody accept it.
Yeah, they didn't, but now it's not in there anymore. And there are other provisions there weakening the Bitcoin law, but it does still exist in paper print format, right? But the whole process of that being rolled out, I think, frustrated a lot of Bitcoiners because it was just pushed out, in night one evening, and no communications were sent from the government.
Yeah.
So you can understand how people could be frustrated if you move there with your family and you set up your life there, your business and everything. And the reason you moved there was because it was this law and adoption of Bitcoin, and things are being rolled back. It could be very frustrating, and I can understand that.
And then you mentioned earlier about a nation. It's the wealth of a nation has typically always been on the energy that they had.
Yes.
I thought it was very interesting that you said that you could have the nuclear power plant and then create energy, right, by mining Bitcoin. And I thought it was very interesting they had this volcano, which typically you think of El Salvador, a poor nation with no exports.
Yeah.
And now they have a volcano, which is really useless. Well, if they could use the energy to mine Bitcoin, they have power. And then I started thinking about the implications of that globally. So like through the South Pacific, you have atolls with volcanoes. Yeah. And they could plug into that, generate heat, mine Bitcoin, use Starlink, and like they could generate gravity. That could redistribute the power of the world, which I thought was pretty amazing. But then I think the whole volcano mining thing, did that all fall apart as well?
Well, it was supposed to be launched in 2023, and it just didn't happen.
Right.
Which is unfortunate because the structure that I put together was buying $500 million worth of Bitcoin at that time, which would have been $47,000, maybe $50,000 per coin. So that would have proved out this Bitcoin bond model. But other countries are still interested in it. So we'll see what happens. But going back to the conversion of energy to money, the biggest geothermal potential out there in the world is the Philippines. And it is, a developing country. So if they did move into the Bitcoin bond program, that would have changed it. And the second biggest is Indonesia, another country that has a massive amount of geothermal potential. Yeah. So they could become the next, UAE or Saudi Arabia, and incredibly wealthy if they decided to tap into that and mine Bitcoin.
Are you talking to those nations?
We're reaching out. There have been forays into meetings, but we haven't nailed down a meeting yet.
Okay.
But Paraguay, which we just came back from, they are very interested in hydro bonds. So the ones that I designed for El Salvador were called volcano bonds, based on volcanoes, and Paraguay has 4 terawatt hours a year excess.
Okay.
And they're interested to do something. So we went with the senator there, and he's escalating the proposal up, the food chain, and
I want to know. I want to know more about the bonds. I'm going to come back to that, but let's just stick on El Salvador for a minute. So, the per the IMF deal, which I thought Bitcoin had gone up so much they could have paid off the IMF debt. I thought, but here they are taking on more IMF debt, and per the terms of the new IMF debt, then they had to roll that back. As you said, in the IMF documents, it says that they can't buy Bitcoin anymore.
Yeah.
They said they're buying, but they used to announce their buys, and now they don't announce any buys. So
They still announce, but I think
they're still announcing.
there's an analyst, Sani. He did some analysis, and so we theorized that it was transfers, internal transfers, and he kind of confirmed it. Like they're sending it to Binance and then sending it back to the wallet. So there are other government wallets that have Bitcoin that are not public right now.
Right.
So their current Bitcoin reserves are public, but there's something else that they can draw from.
Yeah. Would they, like, I mean, I guess maybe the governments don't need to report that, but I mean, would they come out with that quarterly, annually? Do the IMF documents have to report their assets? Like,
We'll see. But so far, the IMF documents don't show their total holdings. It just says total holdings are unchanged, which kind of is corroborated by Sani's analysis of the blockchain.
and unchanged could be one they did sell, but also they didn't buy.
Yeah.
Okay. Well, as you said, I mean, if we back test what the bond could have been, would have been amazing. So you sort of have this back tested. Now you're talking, so Paraguay, frame of how the bond works and how a nation state could benefit from that. Canada, as you said, has a ton of energy. But how would a nation state with a ton of energy, Philippines, Indonesia benefit from a bond?
Basically, the Bitcoin bond is what Strategy and Sailor are doing, but with sovereign debt instead of corporate debt or preferred shares. It's the exact same thing. You raise capital. It's dollar denominated. You allocate a portion to buy Bitcoin, which will pay back the principal. And then you invest, for El Salvador, it was half into a revenue generating activity, like mining Bitcoin or building new energy infra to also mine Bitcoin, which will pay the coupon off. So it's basically a way to buy Bitcoin for countries that have no good way to buy Bitcoin, right, or are more impoverished. Yeah. But for El Salvador, it's tricky because you have to kind of figure out how to allocate the existing energy that they had, because to build a new geothermal plant takes 10 years, maybe 5 years, maybe 10 years. But you can kind of like move stuff around, shift things around, and squeeze out some energy to mine. But for Paraguay, they have a massive amount of excess right now. So they could raise and start mining tomorrow.
Okay.
They have a six.
So they raise, what, 10 billion or?
Start with $1 billion.
Okay, so the billion. And then, so the 500 million goes into the mining equipment and you actually start mining.
Yeah.
And then 500 million
Buy Bitcoin.
buys Bitcoin. Yeah. And then is that a 5-year bond or 10-year bond or?
I like a 10-year bond because, theoretically in 5 years, the CAGR on Bitcoin could be 0, right? But 10 years, you're definitely going to be up. So the key is that
how would the CAGR be 0 over 5 years?
Worst case scenario, it could be.
Okay.
But not likely.
Yeah, okay.
0.01% chance.
Yeah. Just for the record, sure, anything can happen. Sailor says, to be precise, 29% over the next 21 years. I think that's what he says. 30%. I think it continues at 50% for at least for the rest of the decade. I think there's a case to be made or argued for potentially even seeing why the CAGR could actually start to accelerate a little bit as bigger money comes in. We start to tap into these big goals calendar.
Sailor has his Bitcoin 24 model, and it tapers, right?
Yeah.
I have a model. We haven't published it yet. Okay, we should publish it. But it's called it'll be called Omega 60. Basically, it's 60% growth every year, based on a 60% median.
Yeah, you're the one pushing the God candle.
I mean, the God candle is 10K. It's already happened many times.
Yeah.
Omega candle is the next one, 100K.
100K, yeah. So, I mean, we're starting to chip into the dam, holding back, 300 trillion of fixed income.
Yeah.
And if a big enough chunk of that comes into a $2 trillion asset, I think they can move a lot. So, okay, so 10 years just to be safe, and then all it needs to do is double, because then that pays off the bond.
Yeah. It'll more than double.
I get, but worst case scenario.
Yeah, right. Well, when you're pitching to governments, you should actually try to be as conservative
as
possible.
Sure.
Even for me, I think 60% annual growth is conserve.
Yeah. So then they pay off the bond and they get all the infrastructure and the mine Bitcoin from that. And the revenue was generated.
But also, I structured it in a way where you recoup the principal after 5 years, and then let's say Bitcoin tripled, then you have more Bitcoin left over, right? Sure. Then you share that Bitcoin upside with the investors.
Yeah.
But there are many permutations here. The key is that investors have some extra exposure to Bitcoin, not just the base coupon, right? And it ideally scales with Bitcoin's, astronomical growth.
Yeah. Yeah. I mean, as opposed to a traditional bond right now today, I just have to get money back.
Yeah.
But I didn't make any more money to pay off the money. So.
But if you look at it, like a lot of Latin American countries are in debt to IMF or whoever. And this is really the only way for them to get out of debt. We prepared a deck for Argentina, and it's like, making its way up the food chain. But we did some projections, and we think if they did a sort of a DCA bond doing $1 billion a year, they could probably pay off their debt, I think $100+ billion of debt in 30 years. If they did a lump sum bond issuance of, 30 billion in bonds in 1 year, this year, they will pay it off in 10 years. They will be debt free in 10 years.
Wow.
So that's going to Millet.
Yeah, and it looks like Trump and Bessent, the U.S. wants to open up those swap lines to Argentina, so they're going to have some money in there. Maybe Trump's pro-Bitcoin stance could get down there a little bit. Maybe we'll go for that.
Argentina is also energy rich too, so they could, outside of that program, they can do Bitcoin mining.
Yeah. Okay. Now you're talking about South American countries.
Yeah.
El Salvador, Argentina, Paraguay, etc. Another thing that you're trying to tackle is unbanked people.
Yes.
Per the IMF, it's a couple of years where I thought it was like 1 billion or 1.5 billion people, adults actually, not people, adults in the world that weren't banked. You say maybe the number's higher. I'm guessing a lot of that's probably in South America. I'm guessing that's coming from, number one, most people don't have permission to join. They don't have the right documents. So we're in a sanctioned country. Or they're so poor they can't afford a bank account.
Well, the thing is, banks don't want customers. It's too risky for them now to have customers, right? That's why...
It's kind of weird to say.
It's true. Like, it's harder today to get a bank account than ever before because of all the regulatory requirements, right? Compliance teams are growing in size, and it's risky. Like, unless you're putting a lot of money at the bank, you're a cost center to them. You're not a revenue generating, lender to the bank at that point. So there is no encouragement to bank the unbanked. And this is why I think stablecoins are becoming so prevalent, because they're the last mile. If you look at Tether in Latin America, people just call it digital dollar. They don't know it's Tether. They don't know who Paulo is. It's just a digital dollar that they can get on their phone. And that's good enough for them, because for them, that's their Bitcoin. That's the thing that protects them against the inflation of the peso or whatever bolivar or the currency that they have. And we just have to get them to understand that, Bitcoin is better than that. So it's a process, I think.
And it won't be long before they just call it a dollar. Yeah, and not even digital.
Well, in Bolivia, they're pricing things in the grocery stores in USDT.
Really? Yeah, interesting. So as part of your big initiative to bank the unbanked is to give them access to digital dollars. Well, through your app, or what's that? Through an awful app. See, how are you solving that up?
So I would say we're approaching the USDT users in LATAM. There's 400, maybe 450 now, million users of USDT. Unfortunately, a lot of them are using altcoin wallets. But I think we are the first Bitcoin wallet that has stablecoin support. So in Aqua, you can receive stablecoins from other chains. It'll swap it to Liquid Tether. That's the base of Aqua. It's a Liquid wallet. And then from there, you can swap it to Liquid Bitcoin, send it out over Lightning, or swap it to Bitcoin main chain and put it in cold storage. So that's kind of how we plan to onboard them. Do local integrations, integrate with local payment providers where they can send PIX to their Aqua wallet and get the PIX stablecoin, DPIX.
Okay, what's that?
It's the stablecoin of the Brazilian currency. Yeah, the Brazilian digital bank currency. It's called PIX.
Okay.
But there are a lot of these systems in place in Latin America. You just have to build the right wallet that integrates all the on and off ramps and connects it to Bitcoin.
Yeah.
And that's what Aqua is.
So what markets are you in so far?
We have a lot of users all over the world, but Brazil and Argentina are two of our bigger ones.
What I love about that is I think about stablecoins as a very necessary step. Bitcoin just isn't good for short-term money. It's just too volatile for short-term money. The stablecoins solve that problem, but also it's like this gateway drug where it's like, I don't know about this magic internet money, but it's dollars. Okay, fine.
Yeah.
Over time, they're like, why do these dollars keep buying me less and less and less, but this Bitcoin buys me more and more and more? And then they can see them compared to each other.
Exactly. So at the top of Aqua, we have a Bitcoin price. And then it shows Bitcoin, layer 2 Bitcoin, liquid Bitcoin, and then USDT. So if they're using it for USDT, they're always seeing the Bitcoin price at the top. And they should eventually understand that, maybe we should get some, and you just swap it.
Real estate or Bitcoin? Which one's better? Well, it's not about choosing one. It's about using both together. Because today, 60% of American homeowners' net worth is trapped in their home. And there's no way to put it to work in Bitcoin until now. Horizons help you unlock a portion of your home equity to buy Bitcoin. And it's not a loan. There's no new monthly payments, and you stay in your home just as usual, but you leverage your equity to get Bitcoin exposure. Now, what makes Horizon stand out? Well, there's no term limits. You keep 100% of the upside of the Bitcoin, and the Bitcoin is yours to custody however you want with no risk of forced liquidation. So if you've got equity, but you don't want to refinance or take on new debt, but you would like some Bitcoin exposure, Horizon could be the perfect option. So check out joinhorizon.com to learn more and get an extra $500 in Bitcoin if you use my code MOSS, M-O-S-S, and you get funded. Again, that's joinhorizon.com, code MOSS, to get an extra $500 in Bitcoin.
You used to work with Adam Back, right?
Yeah.
Yeah.
Former colleague at Adam Mack.
Yeah. What do you think about Bitcoin treasury companies? And Adam seems to be like all in, like both feet in.
Yeah.
Are you as excited about them as he is, or what's your viewpoint on those?
Oh, I own Strategy. I supported Saylor's goal from day one. I think it's how you look at it. Some treasury companies seem to be marketing to retail, right? Saylor's approaching a different market segment. He's going after fixed income. And I think this is where some Bitcoiners may sit on different sides of the fence. Because if you're targeting retail, they feel like you're just taking advantage of people. But if you're targeting a bigger market and you're, becoming this monetary black hole, putting everything into Bitcoin, I think that's good for Bitcoin. Right? That's why I support Saylor's initiatives.
Yeah.
What's your thinking, Noah?
Well,
You're biased.
I'm biased because I'm involved in several of them. I think, first of all, it's a process. So, right, he's like 6 years into this or whatever, I don't know, 5 years into it now, right? So it's like a process, and he was able to start with such a massive size. So I think phase one is get to a big enough asset base.
Yes.
And that's probably at least $1 billion and 8,000 Bitcoin. Then once you have the asset base, then you get to phase two, which is then creating securitized debt and credit instruments off of the Bitcoin up balance sheet.
Yeah.
But phase one is sort of that bootstrapping moment, which is like, hey, we need volume on the stock. We need eyeballs so we can raise the money to get the asset base. Yeah. And then ultimately, to the point that you made, Saylor's customer is not a Bitcoiner. Yeah. Saylor's customer is somebody who wants income.
Yes.
They're the opposite of a Bitcoin customer.
Exactly.
They're like, I can't hodl for 5 years. I'm 78 years old. I've got to pay my bills tomorrow, right? So I can't hodl Bitcoin. So they're not a Bitcoin buyer. So that's his target. But I think in the beginning, a lot of these companies are bootstrapping off like Bitcoiners. Yeah. And then Bitcoiners start asking questions like, why would it outperform Bitcoin? Which is a great question to ask. That's what I would ask.
You won't.
No, they certainly will.
You think so?
Oh, yeah, it's certain.
Well, we'll see.
Yeah, I mean, I'll tell you why I think that. But let me finish the thought. The Bitcoiner should ask that. That's our hurdle rate. Why would I put my money in anything else that can be a Bitcoin? However, most of the world doesn't think that way.
Yeah.
TradFi says, will it beat inflation or will it beat the S&P 500?
Yeah.
And so I think if you can market to TradFi, then you have a much bigger market and they're not trying to beat that hurdle way, right? So I think the Bitcoin person is a smaller person or a smaller addressable market. Why do I think it'll beat Bitcoin? Yeah. It's because of the multiple, right? So currently, a metric that Saylor introduced is this MNAP number. It's a multiple to net asset value. It's no different than a price to book that you would see in traditional finance, right? TradFi. Why should it trade more than one, right? So if it stays the same as Bitcoin, it'd be 1 times NAV, right? If it can go to 1.2 or 1.5 or 2.0, then it beats Bitcoin, right? So why should it get more than one? Well, the reason why it gets to more than one is because they're using leverage.
Yep.
So if I borrowed 50% LTV against my Bitcoin and bought more Bitcoin, I'm leveraged and I'll probably outperform my Bitcoin. I'm going to have to deal with the volatility,
Right.
but I'll outperform Bitcoin, right? So it's adding leverage that gives us that outperformance. Now, how do we do that? First of all, if we look at like asset-heavy businesses, so this would be banks, insurance institutions, oil companies, they're typically trading a 1 to 2, maybe a 1 to 3 price to book ratio. So banks have leverage. Of course, the top 10 banks trade a higher leverage than community banks, for example. But they're all trading greater than 1 typically. Like when the oil crisis happened, sure, it got to 0.8. But like most of the time, it's in that range. So I think that's sort of like a range. Saylor thinks that if you watch his Q2 presentation, he, and you've been with him many times, he thinks in like 10 to 20 year chunks.
Yeah.
So not 2 months or 5 months, 10-year chunks. So in his charts, they're modeled for 10 years. And this is where a lot of MicroStrategy investors get very frustrated. And he's like, hey, we've doubled Bitcoin's performance in the last 12 months and 5 years. But what about this quarter? This quarter, like, I'm thinking 10 years, right?
Yeah.
So he breaks that chart, and there's 3 levers. You have leverage. How much leverage are we applying? And we apply the leverage to preferreds. Right. So anytime I take on debt, members, or I sell preferreds, that's leverage. And then you have the ARR of the Bitcoin, and then the KEGAR. And then you have the yield, how much I have to pay out. So those are 3 variables put in there. But if we get like a 30% KEGAR and a 30% leverage at an 8% yield,
Yeah.
that would give him what he calls Bitcoin factor, I think, of 2.9 for a mole. So he thinks that's the floor, right? It should trade at a minimum of 3 times Bitcoin because of the leverage.
Well, I think it could go higher.
No, I said floor.
Floor, yeah.
I said the floor.
But if you look at a lot of other companies, your P ratio is sure they're insane sometimes.
No, right, of course. I mean, it should be 20. Right. So if you look at like the price to book of Tesla, right, and now we're on 20, 30, whatever. So no, he said that should be the floor. So 2.9, 3 times would be the floor. So that's 3 times the performance of Bitcoin. Now, he could easily get to more leverage. And we also probably both think that Bitcoin does better than 30%. So now we're at 5 or 6 times, right? And then you start thinking about, okay, what if we start buying these as a growth company and not a stodgy old bank? Because banks and oil companies don't have assets that are growing up at a 50% of CAGR.
Yeah.
So now should it be 6 or 8 times? So I'm saying 3 times, and that's why I think they outperform Bitcoin. Now, will all of them do that? Of course not. But I think most of the good companies should achieve at least a 1.5 or 2 times. And most of the good companies should outperform it.
Right. So it depends on what time frame. If you're like an investor, I guess you're looking at quarters, right?
Well, they shouldn't.
Yeah.
They should. That's a big mismatch.
I know. But Sailor, yes, he's looking at 10, 20. But I think eventually there is a time in which there is no more capital to sell to. Like,
There's 300 trillion.
we'll see. Can 300 trillion access Bitcoin directly? I think things will change. Like if you look at Redefine, they have kind of a moat, right? But if the laws change and spot Bitcoin is now not taxed as heavily, I think it'll see a decline. But if you take that principle and apply it to the broader market, whenever it happens that a lot of that capital can go to spot, I think it'll change that equation. But for maybe 10 years, maybe 20 years, maybe 30 years, it could outperform. But I think ultimately it equalizes somewhat.
I think this is where the discrepancy is that most of the market's missing what's going on. And you just said it, actually. So you said that he's going after institutional investors.
Yeah.
So the real product MicroStrategy sold the Teledo software. Strategy's new product is selling credit instruments.
Yes.
That's where they're selling. So they're selling 10% yielding products to people who would never buy Bitcoin. They're not buying Bitcoin.
Right.
They're buying 10% yield of products.
But let me ask you, Mark, do you see a point at which does the dollar coexist with Bitcoin forever?
Well, for a long time.
Well, let's say 50 years.
Yeah.
You think it coexists for 50 years? Okay. I'm of the camp which is it does the mechanic coexist. Eventually, something's got to give, and people just want one thing. But nobody knows when.
I would use history as our guide, right? So the dollar took over the reserve status from the pound sterling 100 years ago, roughly. And that was about a 40-year process.
Yeah.
So it didn't happen overnight. It was like a process, right? But even today, 100 years later, the pound sterling is still the third most used currency in the world, and they produce no exports, have nothing of value. Not to blow them on the bus, but they're still there.
Yeah.
Why is it still the third most used currency in the world, right? So I think so Bitcoin could take 30, 40, 50 years to become the reserve currency of the world, or the unit of account of the world. Mm-hmm. But it doesn't necessarily mean that the dollar goes away. Why is the pound sterling still there?
Because Bitcoin is still young, I would say. Yeah. It depends on your view. Like, if Bitcoin is the best form of money ever created, and we have the ability to teleport Bitcoin around the world in an instant, we can verify, you can't counterfeit it. Maybe it changes the dynamic.
It does, because it can be everything in one asset.
Yeah.
It can be the whole stack in one.
And so I'd agree. I've given where I think it is by 2030, 2040, 2050. I think after 2050, 2050, 2055, it becomes a unit of account of the world. And at that point, maybe there is the need for 100 and however many fiats there are.
We'll see. But I just know there's a lot of inefficiencies with fiat currencies. And we're going to see a lot more drop away. Yeah. And you had in the past, reboots of currencies. And I don't think that's possible today. Like if your currency is inflating, you can't make a new one. With Bitcoin and stablecoins, you just cannot sell it, right? The alternative exists now. Yeah. So I think you're going to see fewer and fewer fiat currencies.
Sure, we'll roll into the dollar.
Yeah, they'll dollarize.
Yeah.
And eventually, to be determined, it either coexists or it doesn't coexist.
I think it's 25 or 30 years, and then it becomes a unit account, and then the dollar will probably fade in the distance. And I think we agree, maybe a little different on time frame, but mostly the same. But we have, what I think is interesting is you take, again, $300 trillion of, what is that number even? 300 trillion, like saying, right, of fixed income. And if you think about it, right, like, so I'm a San Diego person and I need the income, right? So I have money, I have debt that I'm being that YOFA. And currently that debt is based off of fiat debt.
Yes.
But what happens is that's paying me 4%. Let's say it was going to pay me 10%.
Yeah.
So I'm going to take the debt and I'm just going to move it. The debt doesn't go away and it doesn't get extinguished, but it now moves to a Bitcoin layer. So it's almost like the bedrock of this 300 trillion gets rug pulled and Bitcoin goes under. So the 300 trillion is still there, but now sit on a Bitcoin layer.
Yeah. That's a good point. What could prolong the dollar's lifetime is just so many debts are dollar denominated.
Yeah.
Country sovereign level. And something that could mean they need dollars still.
That's Brent Johnson dollar milkshake theory's whole basis is that all the debt is dollar denominated and it has to get extinguished. And so it has to get paid back from the dollar.
Yeah.
Yeah. We're going long, but I want to dig into the main topic I want to talk to you about.
So we first chatted about it.
But yeah. And that is that's at least the immediate future of Bitcoin and the consensus or the protocol. Yeah. And so there's a big debate that's going on in the Bitcoin community, and this might be a little bit deep and maybe a little bit too much nerdish for most of my community, so I'm sorry about this, but it's an important topic. Bitcoin is sort of creating a division between Bitcoin Core that maintains the code base trying to go from B29 to B30.
Yeah.
And some people don't like that. And so now we have this not spinoff that's trying to do something else over here.
Yeah.
So let's Frank, what the heck is going on?
So it comes down to the core developers are changing a default. And why it's causing such a stir, it's not really a technical thing. Like people like to say it's a technical discussion. Changing the default is not technical. You're removing it, you're changing the limit by removing the limit. It's really about telling other Bitcoiners what to do. Yeah. And Core is the main implementation right now. So what they change has a massive impact on the market. A lot of people just upgrade. Like most people just blindly upgrade their software. And this is what people are kind of up in an uproar about. And there's many differing opinions on the detrimental effects of the upgrade. But to me, the crux is Core is changing a default, and I, as a node runner, don't want to be told what to do. So people are moving to knots for many reasons. One of them is a protest vote. Like, you're not telling me what to do. Because, Bitcoiners are very sovereign, and
Well, why do they have to be told what to do? Because can't every node runner just stay on V29?
they can. And a lot will stay on 29. I'm kind of in a neutral faction. I'm just saying I'm not upgrading. I'm not going to let you change the defaults. But the defaults do matter, because when like the miners upgrade and they go to 30, then that changes the network behavior because they run a lot on the defaults. And that is what a lot of the people in the Knots camp are worried about, that now you just remove the limit and we're going to have massive op returns, and spammers are going to spam and make a new collection of cat NFTs that are 100 kilobytes to take advantage of that.
So, one, why are they going from V29 to V30? As you said, it seems like they're making a change to accommodate another group of people, essentially the miners, so the miners can make more money.
Not necessarily, but
Maybe for other layer 2 applications,
yes.
right? So like layer 2s and miners shouldn't be forced to create and innovate based off of layer 1. Layer 1 shouldn't change for layer 2. That seems like
That's another part of it. I mean,
that would seem like a given.
the rationale was another company called Satria, they're polluting the UTXO set. So that's like kind of transactions that are, Bitcoin transactions. It's a big database and it's often stored in memory. And then you have like the operator, which is the thing that's stored on disk that can be discarded if you run a prune node. But the concern is like we don't want them to make these UTXO transactions. We'd rather have them in op return so we can get rid of it. So that's kind of one of the many rationales. It's a very complicated, multifaceted, debate.
I believe that there's a lot of unintended consequences. So things could happen that we're not prepared for. We don't know until we know. I also believe that everything has a trade-off.
Yeah.
There's no free lunch, right? To get something, you give something. So then, if we go to Knots, now they have a way to handle that. But what's the trade-off there? Now, are they censoring it, or they're putting a filter and choosing not to run certain things? The filter, which is another form of censorship.
Yes and no. I mean, here's the crux of it. One side is saying it can be filtered, and the other side is saying it cannot be filtered. And they're both right, because you can bypass filters. Filters are done at the node level. If the miners decide to mine a transaction, it'll go in the blockchain. So both are right. You can filter. The filters are a deterrent, but they can be bypassed because miners can mine whatever you're filtering still. So I think that it's a more philosophical discussion on development. The developers don't want to fight a battle against spam. They would rather build cool new things. So no one's working on anti-spam protections in Bitcoin because they think it's a game you can't win. And if you sit down with Adam back, I'll say, yeah, I've rationalized and reasoned through every single way to fight spam, and I've come to the conclusion that you cannot fight spam. So that's why they're saying, let's let it be the way it is.
Well, you don't have to increase it to make it easier.
No, you don't. And that's what these guys, the Knots camp, are saying. And I guess I'm also saying that you should deter it and you should fight this ban. Because let's say you're right, it's an arms race. The people kind of have spoken, the Bitcoiners, they want arms to defend against the spam. So there should be...
Is there really spam, though? So let me frame that question up. So you just said that money has changed. It's now information. A lot of people say Bitcoin has no value. Well, you may not see value, but I see value. And so then we think about free markets, and we start to think about what goes into the block space, and it should be for monetary information. But what's a monetary information? It's all information. And what information is the most valuable? So if I'm willing to pay for that information more than you're willing to pay for the information, your information might be a monetary transaction. My information might be whatever message. I mean, shouldn't the free market just decide what goes into that? Is it really spam if it's actually more valuable than monetary transaction?
So this is a really interesting little conundrum we've gotten ourselves into. So the spammers have basically said, we're paying fees, so we're not spam. But the most important thing is spam is never from the perspective of the sender. It's from the perspective of the receiver, which in this case is the node runner.
Stuff I don't want.
Right? Stuff I don't want. Like, okay, let's talk about email spam.
Talk about my text message spam. Sure. Every day I'm approved for a new loan. I didn't even apply for it.
Yeah. But, that guy paid for his cell phone plan and whatever, and, he paid to send it to you. It's not spam. But you think it's spam.
Yeah, good point.
It's the same, like physical mail, like junk mail. Yeah, they pay the postage fee. It's not spam. Spam is always from the perspective of the receiver. And in Bitcoin's case, it's a receiver. Now let's go into is it data? So Bitcoin is information, but not all information is Bitcoin. If you download Bitcoin, the client in 2009, and you boot it up and you get some coins because you could mine back then on a CPU, and you send some coins to me, that's a Bitcoin transaction. If you stick a picture in there, that's not native behavior of Bitcoin, right? Yeah. So people in the core side have said, Bitcoin is just a database, right? But it's a database of Bitcoin as the native data. And you can send and receive that native Bitcoin data. But if you start sticking other things, that's not what the software was meant to do.
I had never looked at it from that angle, so I appreciate that perspective. Because to your point, I expect phone calls from people I know and want to hear from, not new loan applications every day. And it drives me crazy, and I've downloaded applications to filter. I can't stop it. So
the spammers are saying, you can't censor us. You're wrong to censor us. But my perspective is, you shouldn't be here. Why are you here in my hole? Or whatever. Go to Ethereum.
Because this space and my mail is not scarce, but the block space is scarce, wouldn't true monetary transactions crowd them out or price them out?
Well, that's another argument too. Like, the fees are the filter. But we've also changed the economics. Like, during the block size war, we increased the block size, the effective block space, right? We scaled Bitcoin, we made transactions cheaper, but we also made spam cheaper too, by a multiple. And we're doing other things too, like removing those limits that Core is removing. It makes it easier. So yes, you can say fees are the filter, but you've also just kind of opened the door and made it cheaper for them to send you the SMS. So
yeah.
A lot of dynamics have changed.
Yeah.
And you show that you can bypass the filters. So now you kind of showed people that were less savvy, less technical, that, you can do this now.
Yeah. What about the precedents that's set that once I show that I can filter things, then the government could say, you can filter things, and I want you to filter out these OFAC non-compliant addresses. We want you to OFAC this out, these mixer addresses and things like that.
But you can. You can't really stop it. Even if you get a mining pool to say, Mark, your pool should censor these transactions, someone else will mine them, right? The thing goes both ways. You cannot stop spam 100%, but you also cannot stop transactions 100% too.
So, I kind of fall in line with Sailor, which is maybe the best way to ruin something is to try to fix something.
Yeah. You heard his spiel on, if I wanted to destroy Bitcoin, I would hire a lot of developers to make it better.
Yeah, make it better. Yeah, not fix it, but make it better. You're right.
And there was an inflation bug. Someone was trying to optimize Bitcoin, and they introduced an inflation bug to Bitcoin. And that was there for 2 years, almost 2 years. Yeah. So in that 2-year period, someone could have inflated Bitcoin supply. It killed it.
So it seems like it's almost just ossify the code. And if there's something critical, we could maybe see about fixing it. But try to make improvements of changing the block size seems off. All right. So I don't want to go too long on this, but you're in the neither camp.
I lean more towards not. I think that there should be efforts to fight spam. Maybe it's not winnable, but there should be tools given to people. There are so many proposals for soft forks, for new features of Bitcoin. Everyone wants to do something new with Bitcoin. And it goes back to Sailor's point. If you give developers unlimited resources, they're going to try to build things.
It's like the point I made earlier. Legislators legislate.
Exactly.
Coders want to code.
Exactly.
They need to build something. But go build layer 2.
Yeah.
Yeah. You've been around a long time. You understand this at a deep level. What is from your perspective, your historical precedent that you've seen set, the block size wars that you've been through, etc., is this like it's a healthy reaction to the Bitcoin community to debate this and find the ways around this, or is this like one of these could be critical and people should be like kind of like paying attention, worry about it?
I think it's good that people are discussing it and we're bringing things up. I think having one dominant client is not the best thing. So I think knots existing and having 20% of the network is good. I think even better is you get a third implementation that's widely adopted, and then you kind of have a three-way balance. It's like a triangle, or separation of the powers in the government, right? So you can't force any change through without other two clients gaining major adopting it and gaining attraction through that way. So I think that's the best way to ossify Bitcoin. So you can't just ram a change through, and that's largely what this is about. Like Core is able to set defaults because they are the primary dominant client.
Yeah, I don't like that. So this might be a healthy reaction. It's not mission critical.
There is balance, and no one group can push something through as a default.
Yeah. Okay. First do no harm. I like that. All right, Samson, I think we're going to wrap it up. We covered a lot of ground. Unbanking the bank, or banking the unbanked was Aqua. Nascent state adoption. I love the bond idea. And politics. So anything else that you want to point people? What are you working on? If you're paying attention to, download your wallet, Aqua, give it a try.
Check out Aqua. You can look it up on aqua.net.
Yeah.
It's on the App Store, Apple, Android. And we're on X, Jan3Com. Yeah, I'm on X too.
Yeah, cool.